Welcome back, everyone. This is an update on the oil market. WTI price action remained rather subdued in the past daily sessions, not performing the major move that analysts or traders may be eager to see. In our view, the oil market fundamentals remained unchanged during the past weeks, which is also reflected in the price action currently. Yet the OPEC monthly report, the weekly oil market readings, and other important matters driving the commodities price will be further investigated through this report. Starting first with the weekly oil market readings from the US, the Energy Information Administration yesterday released its second consecutive drawdown of minus 1.64 million barrels. The reading was rather discouraging for WTI bulls, as it was a smaller drawdown compared to the reading expected, but also to the previous week's figure. On the contrary, the American Petroleum Institute released a minor surplus of plus 0.69 million barrels. The reading came as a surprise, as analysts expected a drawdown. During the previous week, the Baker Hughes rig count indicated active oil rigs continued to be in a decline, falling to 179 from 180. The overall conclusion we derive from the pre-mentioned indicators is mixed signals. On a different subject, the OPEC report for September was released in the previous week, providing some useful insights that traders should be aware of. Starting first with the global oil demand for 2020, which was revised lower, now reaching on average 90.2 million barrels per day. It was also noted that oil demand circumstances in Asian countries and India remain in uncertainty at the moment. The ambiguity in the pre-mentioned statement forces us to advise caution, as circumstances in the oil market remain fragile and could lean in any direction unexpectedly. Referring to 2021, OPEC's forecast for world oil demand increased compared with the previous month's assessment to average 96.9 million barrels per day. It was also said that recovery in oil production is already taking place in the US, Canada, and Latin America in the third quarter of 2020. Yet, the late Hurricane Laura somewhat impacted oil activities in the US Gulf of Mexico. In addition, demand for OPEC crude in 2020 had dropped from the previous month and was also lower compared to the same period in 2019. Demand for OPEC crude in 2021 is forecasted to be lower compared to the previous month, but nearby 5.5 million barrels higher than in 2020. Overall, crude oil spot rose in August, reaching a 6-month high as physical market fundamentals recovered steadily, in addition to a recovery in refinery operations in the largest regions. As a conclusion, very interesting was the approach taken by various hedge funds and investing institutions in August. No specific trend was identified, implying that most of the traders do not feel very confident of forming any investments in the oil market at the moment, especially any aggressive position. The uncertain outlook on economic and oil demand recovery is possibly stemming from COVID-19 cases rising globally and virus restrictions tightening again in some countries. Those were the fundamentals for the commodity. Please stay tuned for the technical analysis. Welcome to our technical analysis. This is WTI daily chart. WTI is currently trading nearby $40 per barrel. During the past 2 days, a minor sell-off had occurred for the commodity, which resulted in a test of our S1 39.50 support level that was not breached, however. Though other previous activity lower was found nearby the S2 37 line that was tested from the 8th to the 14th of September but was not breached. Our lowest level for this report is the S3 35.50 hurdle. If WTI is to move higher, then the R1 41.50 resistance level could come into play, as it was tested from the 17th to the 21st of September but was not breached. Even higher, we have also noted the R2 43.50 level, as it was the highest point reached after the pandemic outbreak so far. Finally, a surge above the R2 line could lead the commodity to the R3 45 level, as it could be considered a round number target. Overall, we must note that the commodity has been moving in a sideways motion between the R2 43.50 level and the S2 37 level since June. That's the end of this report. We hope you found it useful. Thank you very much for your time. From everyone here at IronFX and me, Angelo Zittis, wishes for solid trading.